Okay guys, hope you're well. This is a follow-up for Lee in the Discord, so a little salute to you, kid. We've just broken down EURJPY, and I'm going to pull the chart up, which I'm going to do right now, and we're going to see if what we were talking about plays out. So let's run the intro and we'll carry this on.
Matron, take them away.
Okay guys, warm welcome to one and all. This is your first time here. These videos are really just trades that we have in motion. What you see is what we see. It's not rollback charts. If you look at the date on the bottom, you'll see that it is today and it'll be the day the video is released. And if we come on to the Discord, you'll be able to see the timestamp there and the chart read that I did, which if I scroll that through, you'll see there it is there. Okay. What we've also done in here, if we look above, you'll be able to see a strength scale. Now this is telling me the euro is reasonably strong, but JPY, which it's bidded against, is stronger, and the JP has gained a lot of ground and the euro's only gained a little bit. So what we're going to be doing with this is we're going to be selling it. And why are we selling it? Well, because I work this out for them as well. The guys do have a tool that works out the bias and the strengths, etc. for them. Well, not the strengths, that's personal to me, but the bias rather, and how good a bias that is. Now this one's actually on an A. It's telling me to sell it across the board, but it's also telling me to wait. So why is it waiting? Well, let's just take this out to a trigger channel. This is where the ideas come from. You've seen a big surge, it's collapsed and 100% retracement. It's failed to retrace against this move and collapsed, and now it's pushing down. Well, if it's pushing down, it's going to push down into these blue lines here. Okay, and the reason being is they're extension points of this. Now, there are key areas that I've marked in this trading zone, and it's currently sitting in one of them right now. So it's come up, it's touched the base of that and moving to the upper side. As we come to the 15-minute, we can see there's a resurgence coming in here. You know, it's retracing on itself. But if the general direction is down, well, there's a reasonable assumption that this might move down. So what I'm doing at the moment is I'm following candles. So I've got a price here on the base of this zone, and I'm just going to follow that price up. But I actually think it'll probably start selling fully up and around this area. Now, if I draw a Fibonacci extension retracement on this, we'll start be able to having a look to see where this might be. And sure enough, there's your 61 and your 50, which are the key zones. It's probably going to be here. This blue line is where I want to be. But stranger things happen at sea, and because it's selling, I want the price to come to me. In other words, sell down into it and push down. If you look on the sheet, actually tells me what my target should be. It should be around 11 pips. It's good. So that's fine. So we can hold that probably down into here, which is a bit bigger than that. And now just let it play out. And that's it. It's a very, very simple process. Because it says wait, it's a case of just let it do its thing. You know, I'm not going to chase the market. I'm not going to drop it into sort of 5-minute charts or 1-minute charts just to get a key entry. I'm pretty much good to go. Now, if I count this back, 1, 2, 3, 4, 5, I'm still back in the same place. So it is around here that I want to be. I could move that up slightly because I am reasonably confident this is going to sell to underneath that candle. So again, it has to come down, trigger me in, and I can do one or two things with this target. I can leave it where it's at so the chart doesn't have as far to work, or I can just move the target down onto there and get more money for it because I've got a better price. And all I need to do now is just play this out. Might take it a couple of hours to trigger in, triggers in, sorted, and that's it. Now, one of the things that you see all the time is people want to scalp in and out of markets, and they throw big figures around going, I've done this and I've done that. Big figures comes from big size, so you need to remember that. So this is only like £5. It's not a lot of money, you know, not a lot of money at all. So if I want £100, it's got to move some to get £100. You know, if I over leverage this, it becomes a problem. And that's what's happening in the prop industry as well. Every single trader you see, virtually all of them, are over leveraging. You know, I'm one of the very few that actually trades on the drawdown. And if the drawdown is £600, the position size is 60p, not half a lot. That's just fucking ludicrous. And in fact, I might do a comparison to show you. I'm a big advocate of having your own account. Have your own account. Use the prop industry for what it's for, to build your account and build wealth. Because what you got to remember is that money ain't yours. If it's gone, as you've seen what's happening in America with companies shutting down, you get nothing. If you have your own funds, you've always got that protected. There are investment accounts that you can set up as well, where you keep your money. My Vanguard does a lot of heavy lifting for me through the year now. I don't have to do a great deal. And I think I will. I'll put a comparison up just so you can see the difference and what you have to do to earn the money. And if you go onto a compound calculator and you sort of thinking that you're going to be doing 20% a month and one thing and another, you can on small balances. But when it gets to big balances, it's not happening. It genuinely isn't, because you'll be a trillionaire in a couple of years just by the compound effect of having 20 and 30% per month. It's no, you need to be realistic. It wants to be sub 10%. You know, you're doing under 10%, you're probably in the ballpark. And the reality is probably sub 5% a month. If you do 5% a month, that is phenomenal growth over a long period of time, because annualized, it's massive. It's outperforming any investment house. So anyway, I'll do that when my head's a little bit better. But at the meantime, I'll just let this play out. So what I'll do is I'll switch the camera off till it triggers, but as soon as it triggers, I'll switch the camera back on, and it has a chance to probably be up here somewhere. I hope it's up there. If it triggers in here, I'll just have to average in and see how we get on. All right, kids, catch you in a bit. Okay, guys, I'm going to go and sort of freshen up a bit, have a shower, etc. So what I'm going to do is I'm quite confident with this that it's going to be selling. So I've placed an order here on that line, and I'm leaving one underneath this cluster, and it's going to either trigger one or both of them to come back down into this area down here. That's it. Nice simple way of doing it. And I'm going to let the chart just play out. So I'll just leave it running and we'll see what happens. Okay, Lee, that was for you. Quite a simple trade. Went where we thought, which was here, and then shot down again. Have I cancelled everything off? I have. And there you go, 273. By simple planning. Everything we do is simple planning. Get your direction right, forgives your entry. That's it. That's the essence of trading. Now, if I held it down to here, which it may well get there later on tonight, I'd have given quite a bit of profit back. Sometimes, God excuse me guys, I'm catching my breath a bit. Sometimes when the money's offered, you need to take it. I could have took it earlier on, but I missed it because Twinkie was twisting on. Thank you.
There you go.
Oh, thanks a lot. Because we almost scruff legs at coffee. What was I saying? Yeah. You take the money when it's offered. Now, I like to go for a round buck, 200 quid. I did see it at 200 quid, and by the time I thought about it, it moved on. I should have took the money at that point. But these are the little mistakes you make, and it does happen, you know, because if we look through, down, back up to where we said it would go, came back down, offered, went back up, offered, came back down, but the general consensus was to the sell side, so I was confident enough to hold it, and that was it. Let me just show you that, because it did come down, went up to the exact point where we marked in, came back down into zone of interest, back to the level that we marked, and then stalled again at the zone of interest. This ain't difficult. You know how to mark these charts. You know how to get your direction. You're laughing. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.